Hello everybody, welcome to the technical analysis webinar here with AvaTrade. My name is Troy. I'll be presenting this afternoon/morning. Before we get going, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. Just waiting on a few more responses to make sure everybody's up and running fine. Just type OK in the chat box if you're connected okay. All right, great. I've got enough responses. Looks like we're up and running fine. If anyone has any issues as we go along, please feel free to let me know. Obviously, big day with the technical analysis going wild on the charts. A lot of easily predictable movements have occurred already. With the volatility, obviously, comes great potential profits, but also risk. So keep in mind as we move forward that each and every trade that you take does have risk. You should manage risk in a way that makes sense for you with your trade sizes, stop loss settings, etc. There are some great risk management tools on our web trader platform and AvaTrade Go mobile app that we'll take a look at within today's trading strategy session. So you can see it makes it a lot easier to have a risk management plan and carry it out with the tools that we offer on our platform and app. Keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, obviously, this is a special session in the fact that we've got a war going on in the Ukraine with Russia having invaded the Ukrainian territory in large scale overnight, and obviously still continuing today. Naveen, I'm not sure why you can't see the chat box. Others were able to respond to me. So just have a look at your setup. It should be there. Okay, so the focus today is technical analysis. And obviously, we're going to look at instruments that are related to what's going on in the Ukraine right now between the Ukrainians and the Russians. And obviously, all the tentacles connected to all of that with the other nations around the world giving sanctions and all kinds of tension and stress going on. So, you know, you hate to say you can capitalize on such a situation, and the fact is the risks are there in terms of investments, but there are also some potential opportunities to go after as traders. Sometimes you're robotic with your trading strategies, and certainly we wish the best for everybody in the Ukraine and Russia as well. There are a lot of citizens and a lot of young men and women that are in harm's way right now, and we hope the damage is as little as possible to innocent civilians. Now, what we're looking at here then in the technicals, there are different ways to go about your technical analysis, and we tend to rely on the manual methods of technical analysis in the webinars because that means it's making sure you understand what you're looking at. If you're relying on an indicator that's telling you that, hey, something's overbought or oversold, time to buy, time to sell, you may or may not understand what that indicator is looking at. And in actuality, what pretty much any indicator is looking at are the candlesticks with the price movements in the history, looking back a certain number of candles and determining when the indicator thinks it's best to buy or sell. And that's what we'll go through some of these strategies, looking at price levels, historical movements on the candles, and trying to determine if that helps us maybe predict what type of strategy could be successful with future movements. And that's the idea of technical analysis. If anyone has any questions, any input that you want to give as we go along, please feel free to do so at any time in the chat box. Now, just a real quick, I know we're in the technical analysis mode with this webinar, but it makes sense to always pay attention to the fundamentals as well, especially with what's going on right now in the world. So first headline I see, European stock slump, investors flee after Russia invades Ukraine. I think it's expected that we're going to see headlines like that. Why does it say European stock slump? Well, because the European market opens before some of the other markets, the US market to come later today. We do see down here the US futures. The US futures on the 30 and the US 30 and US 500 are deep in the red, almost 800 points down on the Dow Jones, the US 30, and nearly 100 points down on the S&P 500. Matthew, welcome, welcome. Glad to see you. And so we also see the volatility index up nearly 20%. That's not a typical number to see on the volatility index. It's only when there's extreme volatility that we see numbers like that in terms of percent increase on the VIX volatility index. And so clearly there's a lot of fear on the markets. The other name for the volatility index, some people call it the fear index. And so fear is definitely up. Volatility is up in a big way. And as expected, the US dollar then is strengthening against other currencies. The US dollar viewed as somewhat of a safe haven currency, also like the Swiss franc and the yen. And so the US dollar index is up strongly, sharply, almost 1 full percent. On days when there's fear, sometimes you see the dollar index up 0.25%, and you say, wow, that's a pretty strong move on the US dollar. We see even much more than that now, almost a full 1% gain in the dollar index. That's a significant move and is right in line with the futures being red, volatility index way up double digits, and US dollar strengthening. It's a trifecta confirming that there's a lot of fear on the markets, which I think is obvious right now. Another headline out of Reuters: Russia invades Ukraine in Europe's darkest hour since World War II. You can see the significance of what the world is viewing this as. Not a minor incursion, not just trying to take some small region. The headlines suggest and the world's fears suggest that whether it ends up coming to fruition or not, that this is an all-out war that could go on beyond just some minor event. And so we see that in the headlines talking about darkest hours since World War II. Okay, and the markets are reacting. Crude oil, we talked about this yesterday in last night's webinar. Hopefully some of you acted on any inclinations you might have had after we took a look. We looked at gold, we looked at crude oil. We said easily, with all the fear about supply chains and Russia being a huge supplier of fossil fuels for the world, of crude oil for the world, natural gas, etc., that any all-out war breaking out could push crude oil up, and it certainly did. It broke $100 a barrel just a little while ago, and so that's the situation we're at. Even with the US dollar rapidly strengthening, crude oil having no trouble breaking $100 a barrel. We'll show you maybe some of the positions that we simulated in the last webinar yesterday evening with crude oil and gold. If we look upcoming today, maybe not the focus, but there are some big announcements coming out of the US. GDP numbers, jobless claims numbers, new home sales, and this is a big one, crude oil inventories. Boy, if those crude oil inventories come in that they shrunk more than expected, that could create even more bullishness on crude oil. I think the focus is less on these announcements today, and obviously more on this war that is escalated in the Ukraine. So what we can do first, let me expand the AvaTrade Go mobile app, and we'll take a look at how it can help with your technical analysis and also the fundamental analysis and risk management as well. And so on the mobile app here, one thing that is really helpful for traders, if you go to, you see where I'm pointing here, this tab in the lower right, if you tap on that tab, and this really saves time, as well as has some expertise behind this information. It really helps. Now, the market buzz, that's more fundamental news on stocks. You tap that, brings up links to articles that are coming out by the minute. okay? Up-to-date articles, kind of web crawling, pulling articles from thousands of reliable sources right into one place in the market buzz. You can pick which stock you're interested in, tap on it, and it brings up the articles that relate to it. Real quick, I tapped on the market buzz. We won't spend a lot of time on it because we want to look at the technical analysis on some of these major instruments that are moving. But you see there, 207 articles on Legal and General Group PLC, Alliance. A lot of these stocks are on our MT5 platform, which you can trade on right here through the app and also our web trader. There's Meta Platforms, that's the offshoot from Facebook. Here's Tesla, Pfizer. Look at all the articles. You tap on any of these, it brings up the articles right there, a list of them ready for you to use. Okay, so if we go back to this menu, from Trading Central, we've got some advanced features beyond Market Buzz, also analyst views. Featured ideas have the technical analysis signals. So let's tap on analyst views and let's see. What are the signals that we see? It all makes sense, right? Fundamentally, the technical analysis usually makes sense, right, with the fundamentals. And that's what we looked at yesterday. So USDZAR. Why are all the signals up on US dollar? USD Mexican peso, USD Turkish lira, on and on. USD Singapore dollar, etc. Every signal saying intraday USD up. Had you looked at these signals as they came in and we're trading on them, you might already be in nice profits, right? And we can scroll back in time, and these signals come in throughout the day. And NZD USD sell. Okay, so fundamentally, we did a quick fundamental review, and we understand, okay, we know why the US dollar is strengthening. Dollar index is way up. Look at all the signals. They're right in line with it. So it's showing you that the folks at Trading Central bringing us the technical analysis, they understand what's going on with the fundamentals. It's not just technical analysis. The fundamentals are built into it. So if we then take a look at one of these signals closer. So let's scroll down, find one that maybe you're interested in looking at, maybe New Zealand dollar USD. You take a look and it breaks down the technical analysis for you. So if you go into this saying, hey, I understand that fundamentally US dollar is strengthening with all the fear around the world, and maybe you also find a signal for I don't know, Euro Japanese yen or something like that. Because you figure safe havens are strengthening, the yen being a safe haven, euro might weaken, relatively speaking. And so you find a signal that makes sense first to you fundamentally. And now we look at the technical analysis. And we see it tells you the preferred direction, the preference, the downside prevails. It gives you the price that as long as it hasn't broken above this resistance level, which is this blue line, as long as the movement didn't break above that line, they're saying this signal is still valid. So that's what I'm saying. The timestamps on those signals, it's okay if they're a little bit old, an hour or two. Look at where the price is. Is it still valid within the preferred direction and below, in this case, below the resistance level? Likely it is still below the resistance level. We can take a look at some charts, live charts. Then it gives you suggestions for take profit. Why are those suggested take profit levels? These red lines, why are those the prices they're suggesting take profit? If you go and look at larger candles, you'll probably see these are support levels from further back in time. The technical analysis has been done. So if we switch to, I don't know, 1 day candles, 1 week candles, you might find that this is a support level further back in time. And so the suggested take profits are here and here, these prices. Then it gives you an alternate scenario. If the news changed, if Putin announced they were going to back off the invasion, I don't think that's about to happen, but if that happened and the price went flying the other direction and broke above this price level, if USD rapidly weakened, the New Zealand dollar broke above this resistance level, then they're saying it's a buy signal. That's the alternate scenario. If the movement goes above this price level, then they're saying buy and look for take profits up at these price levels here, which are the green lines up here. So the way these signals are designed are to take a potential market move. If the signal, the preferred direction is still valid. If it hasn't reached the take profits yet, and if it's still, in this case, below the resistance, market move, and then back that up with a pending order. A pending order, in this case, would be a buy position above this price, waiting to buy and take profit up here. Waiting, only buying if the momentum switch is confirmed by breaking above the resistance level, the old support level from back here. You see it was support, it becomes resistance here. All right, so this is how you read these signals. And if you go through and you analyze these signals, you'll see more times than not, they make sense with the fundamental news, okay? And you don't have to pick and trade on every signal. You find the ones that you trust, that make sense to you in terms of what the fundamentals are, and then match that up with the signal. Mehmet, yes, there is an option to see this webinar later. All webinars are recorded, and it will be uploaded to our YouTube channel within one business day, usually same day, okay? Good question. And so our YouTube channel has yesterday evening's webinar. You can watch that and see what we talked about and how things turned out from it. Okay, so let's exit the app. We'll continue to look at the features on the full screen, on the web trader, and it's the same features that are in the app. Okay, we looked at some of the features in the app. Let's look in the web trader platform. If you log in here in the upper right of our website, then you're in our trading platform here, the web trader. And again, the web trader, this platform we're looking at now, and the app we just looked at, they both trade on the MT4 and MT5 accounts. So you can click on this tab and you can switch between your live accounts, your demo accounts, etc. Okay, and I know this says real account. This is a dummy account that I use. That's what's required for webinars. So it's a real but demo account with demo money in it. So we're in line with the regulatory rules on that. Now, what we're looking at here, we can look at yesterday's trades that we simulated. What we can see here in the history, and let's look at yesterday. We took 2 positions yesterday that we simulated, and yesterday's focus was the fundamental news that's going on. Then we did the technical analysis. So I know today's is titled technical analysis, but we also looked at the fundamentals. It only makes sense. And so we bought on gold, we sold on Bitcoin. We did the technical analysis and said, there's been nice pullback. This is a nice entry. On the gold trade, we put AVA Protect for a market move, saying, hey, maybe we feel there could be a really big surge in one direction. We'll protect ourselves with protection for a small premium cost, and we protected it, I think, for 2 full days. You can look at yesterday's session on YouTube, and we said, okay, the protection cost a couple $100. We stand to make almost 1,000 if things go the way we think it will based on the fundamentals. We looked at the technical analysis and thought that it was possible, and those 2 trades ended up turning out, which made up for a few smaller trades that we in a prior session that we took shots at with our proper risk management. And in the end, you're in profit, right? In these examples, even though the win percentage is less than 50% on these 5 trades, overall it's profit, right? And that's what risk management should be about. Limiting risk in a way that makes sense to you, going after profits that maybe give you a distinct advantage over the potential risk. And in the end, the idea is not necessarily that you have to be right more than you're wrong, but in the end, the idea is to try and profit. And so this is what we're looking at trying to do each session, is simulate ideas and strategies that could potentially work out the way that the session last night did. Okay, and so what can we look at again? Let's look at gold. Gold is obviously moving a lot. Whether you would buy or sell on gold, that's up to you. But we can understand the fundamentals of what's happening. Let's go to some smaller candles. And by the way, last night we said, okay, if it broke past this resistance here, and you had a pending order to buy right here, that could trigger a buy position. Okay, and it triggered the buy, up it went, right? So if you had a pending order to buy up here, would have been triggered, and this line was our first take profit line on the 1 week candles. You see the 1 week candle resistance there, it already blew by there. The next resistance, technically speaking, for gold on the 1 week candles is up here. Okay, we're looking at 2070 plus is the high that it reached back on this 1 week candle here. No guarantee it's going to reach there, but that's the next resistance level on the 1 week candles, past 2000. And so the technicals show us that all of this fear that's on the markets right now is driving people into safe haven investments. And so while the cryptocurrencies are plunging, in traditional safe haven investments like gold and the US dollar are going up. That's what has been happening. And so, Henry, you're asking about Bitcoin. Traditionally, cryptocurrencies are viewed as a riskier investment. And when fear is high, they tend to go down. And that's what happened overnight last night and into today. It doesn't mean they'll continue to plunge. There might be a bounce back up, but that's what we saw happen. So the question I see popping up is, okay, gold went up. Be great if you were already in on it, but what if you're not yet? What do you think is going to happen with gold? And the answer is, first, there's no guarantee. All right. Is it the right time to buy gold now? You can zoom in and look at smaller candles and say, maybe I wait for a price that I like better if I don't like the price now. Okay, so usually when there are movements that surge really fast in really large amounts, there's a larger likelihood of some type of pullback at some point. Now, if you're bearish on gold and you think, hey, US dollar strengthening, they're going to raise interest rates soon in the US, and you think gold should come down and you want to take advantage of this high point, then hey, maybe you sell now, right? Maybe you put your stop loss above that recent high, all-time high of 2000 plus, and maybe you're a long-term investor and you think gold should come back down. So I'm not here to tell you should buy or sell on gold. But if you are thinking about buying on gold, but you don't like the current entry point, then the option is to do a pending order. And on a pending order, then you start to look at the smaller candles and you say, if this pulls back, here's a support level that's an old resistance level. Resistance, and then you see the breakthrough here and up it went. So if there is a pullback, this might be the first spot that acts as support, down around 1950. Okay, so Willie, if you're speaking French, we do have other webinars in different languages, and I think there are some French-based webinars as well, if you're having trouble keeping up. My apologies, I'm not speaking French, but we do have some presenters that do. Now, what we're looking at here then is a potential support level back down around 1950 if you think it'll get back down there and you're wanting to buy, right? So if we want to do a pending order, it's very simple on this platform. You put execute when price hits. It'll automatically make it the right type of pending order. You don't have to tell it buy stop or buy limit. It's very simple on our platform. 1950, maybe you say, okay, from just above that support, 1955. Take profit, maybe you say you think it could easily hit 2000. And then stop loss, maybe you do just a limited stop loss. If it gets to this support, you say it shouldn't break this support down here if it's a true strong uptrend. So if it comes down, you've got this leeway from 1955 at your entry to 1933, so 1930, down here on the stop loss. Something like that gets you below a couple support levels. And you see it's almost 2 to 1, possible profit to possible loss. And that's if you get an entry point right about here at 55. I'll draw another line for the entry point. We did 55, so it's right about here. And then your stop loss is below 1, 2 support levels down here at 1930. And still, you don't have to break past 2,000 for your take profit. And so it all seems reasonable given the technical analysis and also the fundamental news situation. Now, the question is, if you're wanting to buy on gold, will it pull back down to 1955? Maybe, right? Maybe. So you set this up in that hope if you're bullish on gold, but you're wanting a better price. And now you say, how much do I want to risk? Now that I got my technical analysis lined up, I've got my support levels identified in the micro sense with the 15-minute candles. Then I go to the bigger candles. I look at 2-hour or 4-hour or 1 week, and I say on the 1 week candles, now I see as I scroll back that I have plenty of room to climb to get to 2,000 without any trouble. And really, you could be looking at take profits if you're really bullish on gold, maybe at the top of these candles without even factoring in this wick, which would be at like 2036. So a take profit at 2,000, if you really are bullish on gold, it's really a reasonable take profit if you think gold will challenge the highs that it was at back here. Okay, so now you can start to use the risk management features in the platform or our app and say, okay, if I'm willing to risk, I don't know, say 500 on the move. Maybe I decide that's the amount, whatever amount you decide that you want to risk per trade or on this trade. Now I can adjust the trade size. What if I do half a lot? How much am I risking to that stop loss? It tells me 1,250. Okay, I just said I wanted to risk 500 as an example. So now I better go to 0.2. And I see, that's exactly 500 risk. And it's converted to my account currency. So it's telling me my possible loss to that stop loss price, the exposure to the stop loss price. Now, if I'm carrying it overnight, that sort of thing, small amount of interest slowly builds. But the bulk of the exposure here to the stop loss is listed. 500 USD in my account currency, possible profit 900. If I like that setup, I understand the risk management, it's lined up for me, then I buy. Okay, now I didn't actually open a position, I prepared an order. You see, orders. It's a pending order, a buy on gold pending, trigger price 1955. It'll open if it hits that price. Very simple to do the pending orders on the platform here. And so that's an example of a market move, or I'm sorry, a pending order. Maybe we do an example of a market move now on another instrument. Mahesh, there's no limit to how high or a certain instrument can go. I don't want to give you a price. Mahesh, for everyone else, if you don't see what he typed, is asking what's the limit on how high gold could go. We just looked at the chart on gold, and not that long ago, it was well over 2,000, and it was at 2,070 plus. Okay, so if you use the recent history as a judge, certainly gold has the potential to reach 2,070, and it wouldn't even have to go to a recent high to do that. Okay, by recent, I'm looking at 1 week candles, not 1 hour candles. Okay, very good question. So let's look at the US 500. It's being requested. Here, it'll be easier in the search tool if I just type 500. There it is. By the way, the search tool is nicer here than on the MetaTrader platform as well. Much easier to find what you're looking for more efficiently. So as expected, we see the opposite movement of gold in crude oil. Gold and crude oil going up. The equities dropped in a huge way. So we see the plunge. First of all, what could you have already done to have profited with your technical analysis? We all knew the potential for all-out war in Ukraine was there. Okay, 150, 190,000 troops, whatever it was, surrounding the Ukrainian borders. Obviously, the potential was there for huge fear and huge escalation of things. So this was a support level on the 2-hour candles. This was yesterday. Support, support, support. All you had to do was have a pending order waiting that if the price broke that support level and hit below the support, to sell. A pending order to sell if the support level broke. It broke, and look at the plunge. Easy trade setup. Pending order would have already paid on that, right? Yeah, the VIX index, Matthew, is way up. Just another indication of how much fear is there. So right now, the strategy could be, and I'm not saying this has to be your strategy, but the strategy could be if you think the markets will sell off further with all the fear, but you don't like the current entry price, then your option would be pending order. That's an option for you. So you start looking for where would I want to trade if this pulls back? And I'm zooming in on 2-hour candles. Let's maybe go to 30-minute candles. And you start to look and say, okay, here's that support level where it broke. Here's the support. Here's the breakthrough. You see it tried to go up. It became resistance. So this is clearly a resistance level now. If you're wanting to sell, let's say on the S&P 500, I'm not saying you should be wanting to sell. Maybe you want to buy right now and you expect to bounce back up, okay? But the fundamentals say there's a lot of bearish pressure on the equities right now, on the stocks and indices. So if you're going with the fundamentals and then trying to line your technical analysis up with that, couple things you can do. Look for the nearest resistance, maybe here. Okay, it already tried to bounce and hit this price and pushed back down. So you could put a pending order up here that if it reaches this price to sell. And your stop loss could be up above this resistance here, somewhere up here. So that if you get the better price and you sell, you can be patient that as long as it doesn't break above the major resistance level up here, which is the major breakthrough on the support when the news hit of the war escalation, this is a major resistance level now. And so that's an option. So the other option would be to say, you think this is going to keep dropping and you'll sell on a market move, okay? And if that's what you feel and you want to do a market move, then you would just sell at the current price and put your stop loss above one of these resistance levels here or up here. And by the way, you can do both. Okay? If you say, wow, there's a lot of fear when the US market opens, there could be even more fear that hits. So if that's the case, and you're looking at, say, 1 week candles, and I scroll back on the 1 week candles, you say, wow, if this is going to be a true market correction with a sustained sell-off, maybe the support level where you're looking is down here in the 1 week candles. Maybe this is going to try and be a major move and push down to a more major support level down here. And if that's the case, when we look at 1 week candles, then you start to come back and say, let me look at those 2-hour candles again. Maybe you don't view this as such a big distance anymore in the bigger picture. So if you're looking to do a market sell, and my take profit on the 1 week candles, if that's what I'm going by, if my take profit is something like 3,600 or something right above that, if that's the type of move you're expecting, maybe I say 3,650. And I put my stop loss then back on the 2-hour candles above this broken major support level here. That only has to be up to, let's say, 4,260 to get above both this resistance and the major one here. So 4,260 gets me above there with my stop loss. 4,260. Now I'm looking, I say, wow, possible profit. It's like triple what I'm risking. And that's with my stop loss above this resistance that it tried today to bounce up, and the more major breakthrough from last night, okay, from yesterday. So with that set up, then I can start to say, okay, if I'm willing to risk, I don't know, let's say 500 on this move as an example. If I had, I don't know, 50,000 in my account and I want to risk 1%, 500, if that's the number I wanted, or whatever it is you want to risk, okay? At least the tools here help you understand. If I put half a lot, I'm risking 7,000, right? So now I know real quick, okay, that was the wrong trade size. Maybe I put 0.1. I'm risking 1,400. 0.25. I'm risking 3,600. 0.05. Now I'm getting closer to the 500, right? 0.04. 590. Maybe I say, okay, that's good enough for me. If that's what I want to risk, it's near my 500 target, or maybe you have a target of 100 or 5,000 or whatever it is per trade, or for this move. So now I've got my lot size picked, my possible loss understood, and my possible profit understood. Now I can make my move. I've got sell picked, and I click sell. Okay, so Jack, you're asking how to sell. I just demonstrated an example of a possible move that someone might want to do if they're bearish on the US 500 to sell. Okay, we could look at crude oil as well. And by the way, if we want to go back to gold and say you want to do a move with AVA Protect on it, this is AVA Protect. So we simulated a pending order move. If it pulls back to a better price, then buy. That's the pending order we've got going here. Buying if it hits 1955. You also could say I'm going to do a market move. Okay, with a market move on something like gold and on FX pairings and on silver, you can use AVA Protect. And when there's high volatility, it's nice to have risk management options like AVA Protect. So I can take a look and say, all right, maybe I want to buy on gold now. Maybe I think it's going to break 2,000, regardless of whether it pulls back or not. Maybe I'm ready to buy. And by the way, maybe you want to sell. I'm not here to tell you should buy on gold. The fundamentals say there's a lot of fear, and maybe fear about inflation of energy prices, which could lead to inflation of other prices. And so if that's your take on things and you think gold as a safe haven against inflation should go up, I can protect by the hour, by the day. Maybe I put a couple days protection here, and I put a trade of, I don't know, quarter of a lot. And I say, wow, I can protect 25 ounces of gold for only $328 for 2 days. I could put a take profit up here of, I don't know, 2,025, which was nowhere near that high I was showing you of 2,070 plus. And look at my potential profit. Over 1,300, I only pay 328 for the premium. So if this is what I think could happen in the next couple of days, I kept my cost with my premium for that protected time period. You see when the protection ends, then you can put a stop loss or something later. And I can buy on gold in that fashion as well. Okay, with AVA Protect on there. Now I paid for that protection, came out of my balance, a small cost, less than what I was willing to risk per trade, let's say, and my possible profit is quite high there. Mahmoud, you're asking if it's possible gold could reach 900. If you mean on a buy position, it's already blown past 1900. If you're asking, could it reach 1900? If you mean on the downside, if you're selling, of course, anything's possible. Maybe there's a pullback. Maybe it pulls back to 1900. Right now, the fundamentals say no. Gold could fundamentally, the fear about inflation of energy prices now and the hyperinflation that's going on all around the world with lots of items, the fundamentals say gold could push higher. But could it drop to 1900? Sure. Anything's possible. And you could put a pending order or a move to sell as well with a capped risk. All right, so we've gone through some examples on some different instruments. We might look at crude oil here. And you say, okay, why did crude oil go up and break 100 a barrel? Listen, there's been inflation problems anyways, right, around the world. And as economies have been coming out of the pandemic, the energy demand has gone up quite a bit. And the energy demand went up faster than the increase in production of crude oil. And so naturally, supply and demand, crude oil price went up. Now, why did it spike so rapidly in the past 24 hours? It's the Ukraine-Russian situation. Russia being a huge supplier of crude oil in the world, sanctions being slapped on Russia. Maybe it's not the greatest ability for Russia right now to get that crude oil out to the world. Also, it's possible Russia could use crude oil and natural gas supplies as leverage against other countries to say, I'll cut back on delivering or offering this energy supply for sale if you put sanctions on us, that sort of thing. This is the fear. Nobody knows for sure whether that will happen or not, but the fear is there that there could be a supply situation with crude oil. And so up went crude oil price with all of these fears. And so, again, technical strategies, very simple strategies could have already worked for you. A pending order above this resistance level on the one-day candles, right? There was resistance right here on the one-day candles at 95.68. If you had a simple pending order above that resistance saying if it breaks above, then hey, there must have been all-out war. Boom, it broke the resistance, and look, that's a classic breakthrough candle. Pending orders, what I like to call trip lines in the market, can work very well, especially when you know there's times of potential crises. Okay, and that's a classic example of a breakthrough candle. Pending order right here, what it would have paid out. Now you might be in a situation, if you're still bullish on crude oil, but you don't like the price, then you're waiting for a pullback potentially to occur, and maybe you have a pending order somewhere down here above this old resistance, which should be support now, somewhere down here, a pending order waiting to buy if the price gives you, if the movement gives you a price you like. Okay, and I'm not saying you shouldn't sell on crude oil. You could sell, put your stop loss above the high, and maybe it pulls back. Okay, do a bit of swing trading if that's the style of trading you like. But certainly we understand the technical analysis is there. The pullback looks like it's trying to occur after breaking above 100. If you see a price you like and you're bullish on crude oil, then putting a stop loss below this breakthrough price, which was right around 95, 96, this would be a support level to get your stop loss maybe below that price to have a limited risk that perhaps this bounces back up further. Okay. Buzu, you're asking, why is there no AVA Protect on crude oil? It's a very good question. AVA Protect is available on instruments that we have available as spot price. So gold and silver are traded on what we call spot, not on futures prices. And all of our FX pairings are traded on spot price, not futures. And so because they're traded on spot, the protection is available on them. Crude oil is traded on futures contracts that then get rolled over to new futures contracts. Or if you pick the crude oil options that list the expiration date in the name of the instrument, then those don't get rolled over if you choose to trade without rollovers. But in any case, those are futures markets that are being traded on, and we can't offer the protection on those futures markets, at least not for now. Okay, and so that's the answer to that. Very good question. We do expect in the near future that we'll have AVA Protect available on some of the major indices. Okay, whether that'll be on spot rather than futures, or maybe we're going to work a way to have it available on those futures instruments. I'm not sure, but I am sure that I've been promised that sometime in the near future, AVA Protect will expand onto some of the major indices. So hopefully that happens sometime soon. Very good questions. Okay, I think this is a good place to stop, everybody. We see the pattern. We see the surge. We see the potential was there for pending orders to have kicked in. If you were putting those trip lines past important price levels with pending orders, they could have already paid out for you. Right now, maybe you're waiting for pullbacks for a price you like to continue in the direction that the fundamental news tells you that maybe you should be trading. Okay? Evans is asking, could I show how to potentially hedge against drawdowns? Okay, let's talk about crude oil as an example. Let's say you already bought on crude oil, and maybe you're in profits already, maybe you're not, but you want to protect against a complete reversal. So what you can do is have a pending order, let's say below this support level. So this price right here, if you're already long on crude oil and you want to be patient and wait for it to go up, then what you can do is have a pending order to sell below a price level that you say, okay, if it breaks below a certain price, then there must have been something that changed fundamentally in your mind. And so I could have, let's say I have a one lot position buy on crude oil, and I'm profiting nicely on my buy, But right now I say, you know what, let me protect myself with a hedge trade. And what I mean is I could have a pending order that if it drops below a certain price, that I sell for the same size trade that I'm already in on a buy. And if the market goes wrong, I only have losses until the hedge trade kicks in. Now, if I'm buying and selling with the same size, I'm covered with my risk, except for overnight interest. And so that's what a hedge trade can do. And then let's say it drops to the next support level. Now I can close that hedge trade, take the profit on the sell, and put my stop loss on my buy, move my stop loss down below that support to limit my risk again. It's like I get to start over on my buy position without having to incur the loss between where the hedge trade kicked in and where I took profit on the hedge trade. And then I could prepare a second hedge trade below that take profit where I took profit on the first hedge trade. I can prepare a second hedge trade below the next support level. If it breaks that support, the next sell pending order kicks in. If you understand, click OK. If you want me to kind of run through that again, let me know. So pending orders can act as backup hedge positions in that fashion. And a lot of times it makes sense to put those pending orders in case of buying on crude oil right now, pending orders to sell below important price levels that you say, okay, I'll only have this pending order kick in if the market shows me a huge reversal. Okay, I don't see any questions popping up regarding that hedging idea. And it's a very good question, and it's a great way to potentially hedge against risk without having to close your initial trade. And even profit with that hedge trade and have a take profit on it at another important price level while you're still holding the other position. Okay, tremendous. And yes, you can do a partial hedge, and you can actually do more than the hedge. You could do hedge plus larger than the initial move. There are different ways to handle that. Very good questions. Okay, everybody, thank you for joining. Please watch your risk management. Let our tools help you with your risk management, and trade with the direction that you believe the fundamental news tells you should, but with the entry points and exit points that the technical analysis shows you like. Okay? And I think you have a great opportunity to go after some huge potential profits this week with these movements. The potential is absolutely there. Just protect yourself on the downside. Evans, we can have more information on any strategy you want to talk about. If it's hedging, come to my next session. We'll be doing another session on Tuesday evening, 6 p.m. UK time. Okay? All right, everybody, thank you for joining. Till next time, good luck with your trading. Make lots of profits. Yes, each session is recorded, Anthony. It'll be uploaded to our YouTube channel by tomorrow, this session. All right, everybody, you're welcome. Thank you for joining.